Hi, I'm Ricky Fort and welcome to the Real Estate 101 podcast. Join me as I lift the lid on the real estate industry and share some great stories from behind the scenes. Like and subscribe and enjoy this episode. Welcome, ladies and gentlemen. My name's Ricky Fort from Geelong Real Estate Co. Welcome to another episode of Real Estate 101. Matt Turner from GSC Finance, welcome.
Thank you.
Mate, exciting times. You're the second ever broker to be on the show. And it's a very high bar around here, so we're looking forward to sharing some good stories. So welcome, mate.
Thank you. Good to be here.
So GSC Finance.
Yep.
Tell us a little bit about that.
So GSC was started by Damien Pearson about 7 years ago now. So he started with a phone and a laptop, and we've grown to 6 staff now in Grovedale, with 4 in the Philippines as well. So there's 10 of us, and we're doing pretty well for ourselves at the moment, which is good.
Yep. So your signs and stuff everywhere. What community stuff are you in, like sponsorships and stuff?
Yeah, so we've got a community partnership program. So we partner with a lot of charities where we'll donate $100 from every settlement to a good cause, mostly food relief at the moment. So we're heavily involved with Feed Geelong through Give Where You Live, and we've supported the Outpost, Lazarus, Feed Me Ballerine, and the Geelong Food Relief Centre as well. Yep. And then sporting clubs as well. So the Surf Coast Soccer Club, a couple of footy clubs around Geelong as well.
Do you find it hard to say no? Like a lot of people reach out and it's not that you don't necessarily, like you can't afford to give to everyone obviously, but you got to make a decision, like where do you think you can get penetration, or where do you think you can actually like make a difference, and just handing over $50.
Yeah.
Does that make sense? It's hard, isn't it?
It is definitely hard.
And as a business owner and a leader and stuff, like your name and numbers out there, people just reach out to you, and you feel guilty for saying no.
We're getting asked a lot more now that we're being seen a lot more as well, I think.
Which goes hand in hand, to be expected.
Yeah, definitely. I don't think we'd probably get asked as much as you guys. Obviously, your signs everywhere. But I think, we see ourselves as being leaders in the community, and we do pretty well from working within the community, so we like to support where we can. But it is hard to say yes to everyone, and it's got to make sense as well. We got to be passionate about the cause that we're supporting. Yep. And certainly with sporting clubs and that, we want to make sure that kids get a go. It's not just going to match payments and stuff like that. With some of the the bigger footy clubs where they might have 100 sponsors or something like that, we try and support something that we're passionate in, which is where I guess the Surf
more
Coast,
grassroots and
Surf Coast, football club. Obviously, Damien's kids play out there, so it was a natural sponsorship. So we're on their kits this year, which is pretty exciting. Nice.
You were saying the Give Where You Live stuff, but you're a busy man. You're hard to nail down. Your calendar's chock-a-block. But you were saying you had a little Give Where You Live lunch.
Yeah. So
perks of being a broker.
Oh yeah.
Getting wined and dined.
I was a late call up to that one because
got to see him for the invite.
Yeah, I did actually. No. So we supported Feed Geelong. So we get invited to a few of the.
What was that day all about?
Today?
Today.
Today was the ENS Classic, so they do a golf day for raising funds for a lot of the programs that they run. So,
you were there for the golf or just for lunch?
I'm not a golfer.
Me either, mate.
No, I hate golf, and it's really difficult because a lot of the events for business people is golf.
Yeah, why is that? We need to change the stigma. It's like not everyone likes golf.
Yeah, why can't we just have a?
And I think it brings out the worst in people. Golf definitely brings out the worst in me. That's anyway.
Yeah. Yep. No, I just politely say no, and we might do something different next time. So.
Outside the food relief stuff, where are you? What else are you guys kind of involved in?
That's probably about where we're at the moment. Obviously, we're trying to educate as many people as possible. Yep. It's a difficult time in the market at the moment, so if we can do something to give back, we will. Yep. So we've been running a few seminars for people.
Yeah, talk to us about some of those.
Yeah, cool. So just before Christmas, we did a first home buyer seminar at the new Holiday Inn, which is a beautiful location.
Upstairs?
Yeah, upstairs at the function rooms there.
Yep.
So we had probably 25 prospective home buyers that came in and had a free information session.
Yep.
And
how do you market for that? How do you get the word out to your customer?
So social media is one. We got a few from there, but it was just mainly word of mouth and going through our networks of professionals that can then spread the word, I guess. Yep. The next one we're doing in March is an investor one, so that one's been a bit of an easier sell because I think investment properties are always something that people are striving to achieve. So We've already
Where's that one going to be at?
Same place.
Yep.
We're just doing carbon copy, mate. So
Yeah,
just,
rinse and repeat. Make it easy on yourself.
Yeah, that's right.
Who do you put in charge of like organising all these sorts of tasks? Like it's obviously hard to run a business, be a broker, like whatever. Who do you give that job to? Philippines?
No, I do a lot of that myself, that sort of stuff.
Is that an after hours sort of?
No, we're pretty good. So we run a pretty lean team, but having the outsourcing and being able to, I guess, give a lot of the labour intensive work overseas, and I guess like there would be some people that disagree with what we that sort of notion of outsourcing and all that sort of thing, but for us it means that there's people out there that are passionate about doing that work, that get a really good opportunity to get a good job. And it just gives us more time to do things like coming to have a chat to you on the podcast today, and going to
doing the stuff where you think you can add a bit more value than
absolutely
dotting the I's and
so they will do a lot of our data entry and our compliance work and all that sort of thing.
Sexy stuff.
All the great stuff. Whereas we're more focused on working with the client, working with our referral partners, working with conveyancers to make sure settlements happen on time. And mainly just making sure the client is as comfortable as possible.
I'm going to show my ignorance. I've been in real estate 9 years. I don't actually know what a broker does on settlement day. Settlement day? Yeah, what do you do?
Hopefully nothing. Best case scenario, we don't do anything. Sometimes we have to pick up titles and drop them off at bank branches. Sometimes we have to make a lot of phone calls to make sure people are ready.
And what does like being ready mean? Obviously having your what? What does that
just
mean?
making sure the bank's got the money ready to go to hand over. So
and that's all through PEXA?
PEXA, we don't get access to PEXA, so we have no idea what's going on. And a lot of the time we don't know there's a problem until someone's calling us after the settlement's meant to happen. And they go, oh, hang on a second, Westpac aren't ready, for example. So
is that where, I guess, being a broker, like not working for a bank direct, you don't have some of those luxuries?
Yeah, to a degree. Like I think if you were working for a bank, you do get access to some of those other systems, or there's a whole different team that just handle it all, and you don't have to worry about it. So whereas with us, we like to probably overservice a little bit, and make sure that our clients know what's going on and they're comfortable and all that sort of thing. Which probably means that we get our hands dirty a little bit more than if I was working at the bank. When I was working for a bank, I used to be able to handle
which bank? Are we allowed to say that?
Yeah, we can. ME. So ME. They're now part of the Bank of Queensland group, but back then they were a small independent bank, and we had a team that did all our settlements for us. We didn't have to worry about it. We just, wrote the loan, got it approved, and they handed it off. So whereas now it's from start to finish we are responsible for it.
How does a career in finance come about? Like it's not the sexiest. You're like, you know what, I can't wait to be when I'm older. It's like, at what point is it?
So I set out at uni to do, I did commerce and law. So probably set out to be
always been a smart cookie. So the glasses aren't for show. They are actually real.
They are real. I can't see forefront in front of me. They're Coke bottles. But so set out to do, I guess I wanted to be a sports agent. I was a swimmer when I was younger. Loved sport, all that sort of thing. Did an internship with the AFL Players Association, and tried my hand at sort of getting into that industry, and it just didn't really ever work out. When I was finishing off my degree, I was working for Harvey Norman in sales and quite liked it. Liked making the commissions, getting the incentives, all that sort of thing. So
because people don't realise like broking is being a salesman. It's the same as us. You're selling yourself, right?
Yeah, correct. Selling your service, selling what you can offer, and selling the value. So from Harvey Norman, graduated, and
what were you selling at Harvey Norman?
Oh, it's computers,
IT stuff,
IT, cameras, that sort of stuff. Doing pretty well.
What were the markups like at Harvey? And you don't work there anymore. What's the statute of limitations?
Well, it's a bit different now. I was probably making, I don't know, if I was selling $2,000 worth of equipment, I'd probably, there's probably $200 of profit at least in it, if not more. But then depends, right? If you're doing extended warranties, that was pretty much all profit.
That's where the money's at.
Definitely. But had an interest in finance, studied a lot of finance as part of the commerce degree, and thought, well, sales and financial planning kind of made sense because it was all about insurance sales and all that sort of thing. And there was a a law that went through to sort of stop a lot of that. And anyway, I did.
Tell me a bit about that quickly, because financial planning is something that comes up regularly for me.
Yeah.
What law is that come in?
So it's called the Freedom of Financial Advice Act, or FOFA, and it brought in a heap of protections for consumers to make sure they were getting proper advice, and they were paying the right fees for it, and banning commissions and all that sort of stuff on things. So it just basically put a lot more compliance oneruses.
Yeah, that one.
Yeah, that one. Onto the planners and all that sort of thing. But
Onus,
yeah, that's what I was thinking. God,
came to me. I was like, "What is that?"
Yeah. Anyway, so it just meant that they had to act more in the client's best interests, and that meant that they had to give away a lot of the commissions and that they were earning and charge fee for service. There's been a lot more upheaval in the industry since I left. How
long ago roughly there?
I left in 2016 and went to banking after that. I had a little bit of a taste of mortgage broking when I was in financial planning. And then, went into banking for 4 or 5 years and then got back into mortgage broking after that. But you now have to be master's qualified to be a financial planner, which is probably not a bad thing.
I was going to say, about to jump in, that's a good thing, I think, because when I worked for Bendigo Bank, I tell this story a bit, but there were financial planners there that weren't financial. And there's people, I see it all the time. Like, I'm talking to a customer about the current market and they need to potentially consider a price reduction or whatever of an investment property they've got. And they hold off taking my advice because they want to speak to their financial planner. And it just depends who it is that they're getting advice from, because some of them, if that's all it is you're selling products, you're not financial planners should have this stigma that this person knows finance. They're going to sort my life out. They know the tips and tricks and loopholes and what I should be doing. Does that make sense? You want to learn from someone that has what you want to get.
There's a story of a client that I had when I was financial planning, and he was really hesitant to take her advice because he had a previous experience with another planner at the time, and we're probably going back to the early 2000s, where he was sold an insurance policy, and the guy actually spent more time talking about Amway than what he was about actually the product that he was signing up for. So that sort of just gives you an indication of what the what the standard of
the barrier of entry was.
And I think that's the problem with our industry now, is that we don't have a big enough barrier to entry. And
real estate's the same, to be honest. They've just changed the course now, so it's a lot more labour intensive. But you used to be able to go into a 3-day course and having to be a real estate agent.
Yeah, well, I think for us it's a Cert 4, and it took me about maybe 2 afternoons to get it done. It's a bit more now, a bit more labour intensive, but it's still a really low barrier. And some of the advice that we've seen given to clients, and they've ended up in really sticky situations as a result, you go, I think
give me some juice. I told you in advance. You come for juice. We're not here for...
Well, I actually have a really good example from the last week, actually. So,
oh dear.
I had a guy that inquired with me, and he hasn't decided not to go ahead because the only finance we could get him was private funding, and that can get expensive. And that's a whole another podcast episode. But he'd signed up to buy a display home off Metricon out in Lara, and it was meant to settle in August. And they didn't issue a rescission notice until last week. And he hadn't got any loans or anything in place. So then he's like, well, what do I do? And I'm like, well, we're going to have to find something quick. His wife didn't work. He was casual. And it just meant that, we couldn't get a loan for him. So the only way that we had was private funding. Or he walks away from the deposit of 80 grand plus costs plus, potential further litigation as well. So that was a really good example of someone that just didn't get advice early enough, and you come last minute.
So who was representing them? Without naming names, is it a who's told them to not worry about it until now?
I don't think anyone told them not to worry about it. I just think he was a carefree sort of guy. And one of the real keys for him was to sell his current house, and it's been sitting on the market for too long. And I won't say who's listed it or anything like that, but it's had price reduction after price reduction, and it's not selling, and I don't think he seems motivated enough to sell it. And I think
give me my number.
I have tried to pass on the referral, but look, I think it's it's really difficult to get the right advice. And we've had other brokers that have tried to do commercial lending for some of our clients, and they're now our clients. They previously weren't, but you just really need to know what you're trying to sell and what you're trying to advise on, and it is a really highly specialised field, and if you don't know it, you just got to. I think people just to be a bit more upfront and say, look, that's not my wheelhouse, but these are people that can help you. We've seen, commercial property, you can't use deposit bonds, and we've had people advised to go get a deposit bond and buy a commercial property.
So they've probably signed a contract, it's unconditional, and then you find out you can't get a deposit bond.
Correct.
That's a process to get that.
Yep.
Maybe quickly off topic, tell people about what a deposit bond is. Obviously,
yeah. Look, it's not something we use a lot, thankfully.
I'm using one today, which is annoying, but yeah.
Our agents don't like it because there's no actual cash that changes hands. So there's product providers out there that will provide a bond to the vendor for a deposit. So if the deposit's 60 grand, they'll pay almost like an insurance fee on that 60 grand. And then
like a 500 or 1,000 or something like that.
It's only about $1,500
Yep.
generally. And the provider will provide that bond up until settlement date. It just means like if you don't have cash, you've got all your cash tied up in your property, you can't release the equity or whatever it might be. We provide a bond just to satisfy that deposit requirement, so the vendor knows that if for whatever reason the sale doesn't go ahead, or they default or something like that, there is recourse for them to get access to what they're entitled to. But yeah.
What's the process of getting? Have you ever had that?
To get a deposit bond?
No, released if a deal can't go through.
No, thancfully, you don't have to worry about it. Touch wood, yeah.
Touch wood. Yeah.
I can't imagine it being an easy one, but yeah, it's all underwritten by insurers and all that sort of thing. So I'd imagine it'd be an insurance claim or something like that.
Yeah. What's the process of getting a deposit bond drawn up?
Just apply online. It's generally a 10-minute process. I put in some information into the provider that we use, and
do most banks offer them?
No, so you have to go through an actual deposit bond provider.
Oh, right.
So Deposit Power, or there's another one, Deposit Assure, I think.
Yeah.
They're all underwritten by the big insurers, but so we broker those as well.
Interesting.
Yeah.
What other good spicy ones have you got for us?
There's a lot of first home buyers that have been stung by land recently.
Yeah.
We had one lady that was declined by her existing bank because the value of the land had gone down by about 45 grand in 6 months.
What's that as a percentage? 10%?
It was more than 10. I think it was about 15. It was only a small block.
Yep.
And they sort of said, "Oh, look, we're worried about you."
So this is someone who's bought a block of land off a developer that hadn't titled yet. Title rolls around, they're trying to get finance.
Well, they'd actually settled on it. We were trying to do their build.
This is build part. Yep.
Yeah. So they'd actually settled with it, and ANZ had said, "Yep, we'll fund that block based on the contract price and all that sort of thing," and that was fine. And then when we started to get the valuations for the build component, they're going, "Hang on a second, the land's only worth 15% less than what it was before."
So what's the recourse on a bank? Doesn't have to be ANZ, but if they tell you, we'll do that, and then they don't, how does that work?
Bad luck.
Right.
They have the ability to pull out right until settlement date. Yeah. So even if you've got an unconditional offer of finance, it's not unconditional until the money's been passed over. Yep.
Spicy. I didn't know that.
Yeah. We don't see it often, but I had instances where banks have pulled out. Not since I've been broking, but I had seen it when I was at ME, where for whatever reason there might have been some fraud or something involved, or some issues with the clients, and the offer of finance had to be withdrawn.
Jeez, that's brutal.
Yeah,
and especially you would find out so late in the piece.
Generally not. I think if we're involved in one of those transactions, we're working with the lender the whole way.
Yeah.
And you'd like to think if it's something fraudulent, we'd have a fair idea something was going on, and try and mitigate that early.
But just from once you've got the unconditional approval, you'd think the buyers are like, yep, beautiful, job's done, wipe their hands, and then they're like, we'll just worry about that when the time comes, and you need to be worried about that.
Well, during COVID, there was a really good one where, we had the unconditional finance come through, and obviously timeframes had blown out, and finance clauses were really worth nothing because the banks were taking 40-something days to approve a mortgage. And then they go, cool, we're just going to do a quick compliance check on random files, and then all of a sudden they pick one out that had been approved, and they go, hang on a second, we need this, this, and this. And you go, what? Like you've approved this, it's been through all your steps. And they go, nah, the credit person missed something, and then you've got to then go back to the client and hope to God that the situation.
They've got it, yeah. Jeez, that's terrifying.
Which we didn't get bitten by any of those, but it's pretty tough. Like,
do you see many like obviously on the loan application forms and that it says is your circumstance likely to change? And it's often people around employment, obviously, right? And pregnancy.
Pregnancy a lot, yeah.
You see on social media, they're like, got the bump, and you're like, should you be?
Yeah. Or there'd be certain pay slips they don't want to provide, or certain conversations about living expenses they don't want to talk about.
Yeah.
But look, if we don't know about it, not much we can do.
No, that's it.
Obviously
you are relying on. I guess people
honesty.
are signing disclosure statements to say it's correct and true information.
Honesty, yeah. And that's the risk that they're running. So if they aren't being honest, they might.
Yeah, you could have your finance withdrawn right up until.
Well, they could, or it could be that the banks find out anyway because they go, hang on a second, what's all these baby bunting transactions? And, or you've just booked a $50,000 holiday. What's going on? Are you thinking about taking some time off?
Yeah.
So the banks aren't silly, but also as a borrower, you might be putting yourself into future hardship by not being honest as well, because if we're talking about kids, generally there's a reduction of income at some point.
Yeah, that's a good point.
Yeah.
Are you seeing like less and less potential, frivolous purchases of people buying? Like, back in my day, it was like the boys, getting an SS Ute loan for $50,000 and that sort of. Are you seeing that start to slow up, or it's still? We're such a keeping up with the Joneses society.
I think so. Depends on the suburb. There's certain suburbs where definitely the appearances matter a bit more than others. But we've seen some people in some real mess, like with substantial tax arrears. So they haven't paid taxes in a number of years, but they've got the new caravan, they've got the Range Rover, they've got this, they've got that. You go, hang on a second. Yeah, you don't have debt on those, but you haven't paid your tax.
Still got debt. Yeah.
So there's a lot of people that get themselves into issues that they come to us for the silver bullet, and sometimes we don't have it. Sometimes we can help them.
Like sell your caravan.
Yeah. Oh,
yeah.
Mate. I had one where, speaking of caravans, and this was my wife's actual advice at the time, and like,
not financial advice. No,
not financial advice, but she said, I was talking to him about this client, and they'd put deposits down on 3 different land and build projects as investments around Geelong. They'd gone to one of those property spruikers and got told about the depreciation schedules and all those funky things, and they had a lump of cash that was meant to go towards all of them, and they used about 45 of that to go and buy a new caravan. And it was about 2 weeks before settlement of one of the blocks that we found out that they didn't have the funds available to actually complete the purchase. So
what's wrong with people?
Yeah, so it was a mad dash to get a loan extension and a top up to make sure that we could settle.
Surely there's that's a separation pending right there.
I said to Damien, I'm like, well, they've got 2 options. They either sell the caravan or they go and find 45 grand. He's like, I don't think they're actually options that they're willing to consider. So we're just going to have to get them more money from the bank, but they could get it. But, I think my wife's just like, tell them to sell the caravan. Like, why do they need that caravan?
Yeah.
I'm like, I know. But yeah.
So in terms of people's cost of living, when you're doing applications and that nowadays, are you feeling like, are you starting to see people slow down, or we're still full steam ahead? Everyone's got to have the YSL. Everyone's got to have the Range Rover.
No, it has slowed down a lot. But there's certain market, parts of the market are still doing pretty well. Certainly, if you don't have kids, you can still spend pretty well.
Yep.
Myself included. But yeah, there's certainly families out there that aren't actually. You look at, we see their statements, we know what they spend, we get a fair feel for what they're doing. But we had that conversation with them, and they're sort of not actually meeting the minimum living expectations set by the banks anymore. So there's always a minimum benchmark of what the banks expect.
Is in they're spending under or over?
Under.
Yeah, right.
Because
they can't afford it.
It's biting. Yeah. So, and the banks obviously take into account the fact that, cost of living has gone up, so the minimum benchmarks go up with it.
What's any? I've never spoken about this either. What is the kind of a minimum benchmark to say, husband, wife, and one child? Like, how do they calculate that?
It's based on income. So there's a metric. There's a matrix that they go off. So it basically, husband, wife, one child, and 300 grand of income will spend $5,000 a month on living expenses.
Yeah.
Just to use round numbers, but yeah, they literally have a matrix and they go, okay, this one. All banks are slightly different, but they go off the Melbourne University model that gets put out every 6 months.
Yeah. Geez, 300,000 combined income like that. You wouldn't think that's normal, is it? Is that high?
No, it is high. As I said, I was just pulling numbers.
Yeah, no, that's fine.
We do get clients. We do have some high net worth clients that earn substantially more than that too. But
of course.
But yeah, look, it's not normal. Probably most would sit combined income around the 150 mark, I'd say.
Yeah, it sounds a bit more what you'd expect.
Yeah.
Mate, obviously we can't let you go without asking predictions for 2024. Obviously not financial advice. You can throw out all your caveats and that, but what are you kind of seeing on the coalface? What's your gut read?
It's going to be a very interesting year. I think the property market should do pretty well, particularly if there's talk about interest rate cuts. I think you guys will be getting pretty busy, and certainly we're getting busy already. People are getting more confident to actually go out and do things, knowing that this is probably the worst it's going to get. Certainly since the November increase that we had was sort of out of the blue a little bit. That sort of slowed down things for about a week, and then it started again. There's certainly that fear of missing out. If we don't buy now, when would we get to buy? So they're just going out and doing it, particularly first home buyers. We're inundated with first home buyers at the moment.
Really?
Yeah, which is good, including my baby brother bought on the weekend, so I'm pretty excited.
Congratulations. How old is he?
He's 27.
Yep.
He and his wife. So they bought down in Warrnambool or Dennington. And yeah, I think it's going to be a really busy year for transactions. Maybe not so much refinancing. I think the refinancing stress has sort of left a little bit because the banks.
Why is that?
Banks are getting better at actually retaining their clients and actually offering good deals. So we're not seeing as much benefit to refinance as what there was probably 2 years ago. Particularly, there's no cashbacks anymore. It's easier to reprice with the current lender than what it is to actually get a better deal elsewhere. So yeah, it really depends on what your deal is, but I mean, it's still worth reviewing. It's always worth reviewing and asking the question to say, can we do better? And if we can, then let's do it. But yeah, certainly the sugar hit of the $4,000 cashbacks they've dried up, unfortunately.
Yeah.
From just lift the lid on how broking and stuff works. Like how do you guys get paid, and what's kind of the most profitable? Like in real estate, it's not taboo, right?
No,
Income's not taboo. Everyone knows how we make an income. Like we charge the seller a commission of the sale price of their home. Like I don't really hear brokers talk much about that, so I'm just interested how it works.
Yeah, so it's a really upfront process actually. So we get paid a commission from the lenders for placing the loan. That ranges from probably 0.5 to probably 1% of the total loan amount. Most of them around 0.66, including GST.
And that's upfront.
Yep. And then we get a trail commission as well to help manage the loan over the life of the loan. So that's 0.15 of the loan amount for a resi loan, or if it's commercial, it's a little bit higher. Because there's generally annual reviews and that we've got to help out with and all that sort of thing. But yeah, the trail commission's basically there so that it covers our time if you need to have a question about pricing, or if you need to, do anything different to the loan, if you want to make some changes, change your product or do whatever, fix in all those different things that you might want to do with your loan. But yeah, the best loans for us are mums and dads with a owner occupier property and maybe an investment. We can generally sort of save them, if they're doing a refinance, we might be able to save them, you know, 0.3 or 0.4 off the mortgage, and then we're getting.
Which is if you got $1 million worth of debt, what's that per annum?
What's that? $5,000 or something? Yeah, yeah.
Per annum over.
Over however long.
How long they fix it?
We generally don't fix at the moment.
Oh, no one's fixing it at the minute.
No, don't fix. Variable's the way to go at the minute. But certainly, I think the life of a mortgage at the moment is around 4 years. So generally you will be with a bank for 4 years before you decide to refinance or restructure or do something else. So
but saving of $3,000 to $5,000 over 4 years, it's worth doing.
Oh, absolutely.
Yeah,
exactly. Some people won't get that, but you know, if you haven't reviewed it in a while, we're sort of, if you're seeing your rate with a 6.6 or above, you're probably going to get a much better deal.
Yep.
Particularly for investors, we're seeing some of those over 7s now.
What do you think's a reasonable, like, obviously going back to the fixed days? Yep. I've always been a fixed guy. I like calculated risk. I know I like knowing what my objections are my obligations are going to be for X amount of time. What do you think, like, over a 20-year period, what's a reasonable fixed figure? Like, obviously everyone's obsessed with interest rates and it's all everyone can talk about at the moment in the news, but like, you know, where do you think's normal?
Normal has changed, unfortunately. So what we used to consider a neutral rate would have been what we're at the moment. But we're in a stimulatory environment for so long where the Reserve Bank and the government were really dropping lending and the ability to get cash and rates and all that sort of thing to stimulate the economy for so long, and house prices, and you know, making sure everything was okay. So you know, the actual what they called a neutral rate was where there was no growth, but there was no you know, we weren't inflating the economy, but we weren't shrinking the economy either. We were sort of just staying pretty natural, and that used to be around that. You know, a good home loan rate used to be between the 6 and 7% mark. Obviously, everyone knows the pyramid days where it was 17%, thankfully before my time. But, you know, obviously we've had 2 or 3 years of 2% or below in some circumstances. Like we had clients fixing in at 1.69.
Good times.
Oh, such good times. Yeah, our job was very easy back then.
Yeah.
But, you know, I think now a neutral rate and a good fixed rate going forward, I think it will be in the 4s for a while. Yeah. Just to... You know, at the moment, they're trying to squash the economy.
What do you call a while, like 12 months, 2 years?
I think if we could sort of keep in the 4s for 4 years, 5 years or something like that, I think that'd be really good. I think that'll cause prices to increase, but not too much. I don't think there'll be that hysteria that we had in the market during COVID, but I think there will be also no hysteria of the rates getting up there, and because like people's debt's so much higher than what it used to be. Like I think the average mortgage in Australia is now over 600,000. So it's certainly, you know, our incomes haven't grown by the same amount, so something's got to give. Or else what happens? Prices go down. Yeah.
So your predictions are just what for the rest of this year?
Maybe one decrease, but I'm hoping pretty flat. Yeah. In terms of rates, and then prices I think will increase. Yeah. Just because there are more buyers out there. Yeah.
Spicy.
Yeah. What do you think?
No one ever asked me what I think, so it's a good question. I think probably the same, but I would say your opinion's more on the conservative side. I think everyone's probably a little bit more optimistic that I'm talking to. But I don't necessarily think it's based on anything other than like them wanting that to be the case.
Sometimes you just got to wish for something to happen and it'll happen.
I'm probably more pessimistic by nature around the economy. And I personally think you and I would be more on there'd be lesser people that agree with that. I think more people are hoping for positive news and, you know, potentially 1 or 2 or 3 cuts this year. I was adamant over that Christmas break that we were going to see an increase in February, despite what we saw, because we saw record spending over Christmas, the Boxing Day sales, stuff like that. I was adamant that we we're going to see one in February, and so I'm obviously relieved from like a professional side of things, and obviously we're having a lot of conversations with people at the moment who unfortunately have to like reduce their price and sell a property and release it at a at a price point where it's
pure desperation.
Almost, so we'd rather see people hang on, but I guess what does hang on look like, and what yeah, I guess that's one thing we're doing a lot with customers is reviewing people's holding costs. If you've got a property that you're not planning to move back into, so it is purely just going to be an investment, you know, what's your holding cost of, like you said, a $600,000 mortgage over 12 months?
Yep.
What does that look like? How long do you need to wait for the market to recover to recoup?
Yeah.
Does that make sense?
Yeah, no, that's right. And particularly, you know, you look at a property like we're in right now, which is very, very tastefully staged by the looks of things, but, you know, that's costing someone money to have, you know, staging in here.
Yeah, it's
but
between
also,
$3,000 to $5,000 usually to stage a property, and that's for X amount of weeks. You got,
and if you're paying the home loan on top of that, like it can get really expensive. So if you're not selling the property quick enough, then, you know, that's becoming very expensive.
Mate, we could talk for hours, obviously, but I think we've done a bit. You mentioned before we started in the show, you had like an offer that you potentially wanted to put forward.
Yeah, absolutely. So if anyone wants to get some advice on buying a property, if they're going through Ricky or any of the team at Geelong Real Estate Co, we're happy to offer $500 off conveyancing. So, you know, it could be any conveyance. It doesn't need to be one that we recommend, but certainly I think we'd like to help people buy property. We'll give a really good education, and obviously, you know, if they go through us and they like what we do and settle a loan, then we'll happily put in $500 to cover their conveyancing, which is
close to half of the
about half
the bill, which is great.
Yeah, absolutely.
Mate, awesome, generous offer. Thanks so much for coming in, mate. We could talk for hours, but we'll get you back for another round. But thanks heaps for coming on.
No,
Matt from GSC.
Thank you.
Cheers.